right, y'all. So I want to do a real quick breakdown of how I kind of go ahead and analyze the charts prior to taking trades. So generally, overall, I usually have a good sense of what the overall market is doing on a larger time frame. Okay, so what we're looking at right now is a daily chart, and each bar represents a day. Okay, so this is going all the way back to August, but generally this is how the market moves. It moves in waves. Okay, it's never just like straight up or straight down. It moves in waves, and these waves create levels, some of which you see that I have marked off. This one is all the way back from July, and you come back over here till October, this level was still respected. Come over here, this is last week, November 5th, the level is still respected here. So that's where levels and everything become really important. Then I like to draw trend lines sometimes, but overall, you see the market has been really bullish, especially with the election results. If you were in the market last Tuesday, you would see that the market immediately just kind of took straight off last Tuesday prior to the election. And so you would have known that essentially the market was pricing in a Donald Trump win before you even had the election results. So the election results, personally, they weren't a surprise to me, but that's neither here nor there. Let's go and analyze the market. So this is the daily chart. I generally have a good sense of what it's doing. We can see here that we reached another all-time high. Over the past week, we reached all-time highs. So the market went on a crazy bull run, okay? Ever since those election results, just took off the day of and continued taking off. And we reached all-time highs again. Now, once you reach all-time highs, there's no level to our left to like kind of find a level based on the all-time highs, because these are all-time highs. The price has never ever been this high in the history of the market, okay? But something you know is not just going to continue to keep going up and up and up and up nonstop, okay? So at some point, the price has to reverse, because remember, even if it's going to continue higher, the price moves in waves. It's not just gonna go. So for us to move higher, we have to retrace back, test a level. Look, we're testing this level right here. Literally, we're actually testing that level right there. Let me draw a line right there. And this was the key level. This is actually what these lines are based on over here. So, but we're testing this level right here. So it could just pull back here, retest this level and keep going. But if this level doesn't hold and we continue going below, then like we're in for a bloody market, which means we're just gonna go down until we reach the next level essentially, okay? But moving forward, so I start on the day chart, get a good overall census of what the market is doing, move in a little bit closer. This is a 4-hour chart, so it's more recent of a history. The gray area is after hours or pre-market area where the market is actually closed. So that's still important, especially when we're trading futures, because the future market is only closed for like an hour. You can trade it 23 hours a day, like 6 days a week or something like that. The options market, not really, or general stock market, not really, unless you're like a whale. But so 4-hour. I'm looking at the 4-hour chart prior to what printed today. So this bar right here is what's going on right now. So if we pretend that that's not even there, this market is like, okay, it looks like we're headed down. So a kind of key level that was formed is this level right here. And we see yesterday, we actually broke that key level and went down. And then in the after hours and pre-market overnight, we continued going down. So that's the 4-hour chart. Then let's hop in on a 1-hour chart. So 4-hour, 1 hour, 30 minute, 15 minute. That's kind of where I usually find these zones, which are supply and demand zones, but we'll kind of go over that on the Zoom call on December 1st. Let's go down to the 1 hour. Now the 1 hour is where I really start to find the trades based on these zones. So once again, we'll pretend like this isn't here yet. So I just have I really base it on pre-market stuff. So what you have over pre-market and after hours, you got like London closed and open and all that type of stuff. Basically just other countries based on the time zone, the market opens and closes, so you still get some fluctuations. But so I kind of find the key levels that were formed in the pre-market and after hours market. This one was one that I drew on this morning, which is a supply zone. So usually when I think that the price can potentially reach up into these zones, I'm looking for a reversal. And you'll see, like I said, I'll go over how I kind of find these zones on the Zoom, but basically you formed a nice key level right here, right? See this? And that's a part of our supply zone. So essentially we formed a nice bottom here for 1, 2, 3, 4, 5 hours worth of a bottom that kept getting rejected. So we know that's a very important level. Now, something that I want to tell you all about levels is that levels aren't hard numbers. It's usually like a zone. And we'll kind of revisit that and why I'm saying that. But another level that we found pre-market is this one right here, where you also formed a nice bottom on the 1 hour chart. So I kind of draw the levels kind of all over because it is a zone and it's not just a specific price point. So when I'm watching levels, I'm not looking for it to hit this number to the penny. I'm looking for it to reach this area per se, okay? So that's the 1 hour chart. Then I usually love to hop down to the 15-minute. This is one of my bread and butter time frames. So once again, we'll pretend all this stuff isn't here. 15-minute, I see a couple things. So this is from the 1 hour. You see the same levels being respected again, okay? This is something I drew after the market opened, and I'll tell you why. But there's a particular strategy called the orb that I don't use it religiously, but I always have it drawn on my charts. So orb stands for opening range breakout, ORB. And what I'm looking for, I usually draw it based on the 15 minutes. So I usually don't trade within the first 15 minutes of the market. I let the market open, kind of form some levels for me. And so that's what this price level is here. This was the top of the orb of that first 15 minutes. So it's the high of that first candle. And then you get the low, which ironically, the low of the orb is the top of this demand zone. So this is a really important level, okay? So that's the 15-minute chart. Then I usually jump down to the 5-minute chart, which is my other bread and butter chart. And so 5 minute, this is kind of where I execute trades on. 5 minute and 1 minute. The 1 minute can oftentimes give you a little bit too much info. So 5 minute kind of cleans it up a bit. So let's just kind of look at what happened. I let the market open for the first 15 minutes. I got this orb level, the high here, the low is literally here. So I actually scalped a trade going up to go retest, quote unquote, retest this zone. And then this line here is VWAP, which is volume weighted average price. That's like the average retailer trader's price or whatever. But yeah, so I scalped it going up. I was up like $2,800 and this candle just took it all away. So I was only up $200 and I sold it at like break even price. We'll go over a lot of like my techniques and stuff that I'll use in that Zoom call too. But I essentially sold it at break even. There's no point in me being up to $2,800 and then letting it go negative on me. But something I had that I knew I had was this orb break. And so I was kind of looking at that. I see the price come down, super red. And remember, I always got to go back to my overall analysis. I'm remembering, hey bro, we were just at all-time highs. Yesterday was a bloody day straight down. And I was texting one of my guys last night saying, hey, I think we're going to go straight down to like the 915s, 920, somewhere in that zone. So I got to remember my overall analysis, but I don't like to predict what the market is going to do. I like to let the market tell me, if that makes sense. So we go ahead. I close that trade out plus 200. I'm like, all right, that's a crazy red candle, okay? Then we got this candle here. It opened here, went up and retested that EMA. That's a 9 EMA that I like to trade off of. I like to find retest off the EMAs and the VWAPs. But even if I'm doing an overall analysis of just this chart, we technically have a retest of this opening range breakout here, this level that I drew up here, tested it, and it dumped hard. Seller stepped in. Well, sellers overtook buyers for the auction of the price, essentially. So a clean setup was to just get in off this break right here. And I remember, like I said, I remembered my my analysis from even last night where I said 915s, 920s is what I'm looking for. And so I entered 10 contracts off here, wrote it down. I got out like at right under 920 or so for about, what was it, like 7.1K. I traded it on Instagram Live actually, just to show y'all. Yeah, about $7,000, and that was within the first 40 minutes of the market. $7,000. Would you trade 40 minutes for $7,000? Absolutely, bro. For some people, that's like a month's worth of salary. For some people, that's a couple months worth of salary. So $7,000 within the first 40 minutes. And we see I could have kept holding. If I would have held it, I actually had a price target. If you look on my Instagram story, I had a price target at 903, which is what? That's the bottom of my demand zone. And ironically, not even ironically, but price is kind of struggling right here at this 903 level. Like these levels, I did say they're zones, but these levels are so important. And honestly, personally, I don't use much else besides the levels and like these little two indicators. So these indicators, I honestly just wanted to stick to my trading plan and not be greedy. So I closed it right under 920. But these indicators, especially the 9 EMA, would have told me to stay in probably until about right here. So if price is holding the 9 EMA, I usually just write it down and just let the trade play out. And so that would have been like a $15,000 trade. But like I said, $7,000 is just as good. That's $7,000 that I didn't have this morning before I woke up. So I will take that any day. Yeah, so that's really it. That's generally how I analyze the trades. It sounds simple because it kind of is, but when you're new to it, like all this is almost speaking like a different language because the price is literally telling you something. It's just trying to like kind of decoding or figure out exactly what it's telling you. Use that information that it's telling you, plus your risk management, plus being disciplined, plus not being greedy. When you mix all that stuff in, that can lead to like big losses or big gains. If you follow your plan and be disciplined, you'll win. If you have those weak moments where you're not disciplined, you'll absolutely lose. And I definitely still have days like that where I lose. Like, it's a normal thing. Something else that y'all saw drawn on like the daily chart that I like to draw are trend lines. I love trend lines generally because, I mean, obviously they tell you like the trend of the market for that immediate point. But the thing that I like about trend lines is it can offer a level of confluence. So when I say that, I mean like multiple things coming together to give you a good reason to enter a trade. Like there's a good chance that this trade is going to be successful because I have multiple factors kind of lining up. And so what I mean by that is I got this trend line drawn right here, and you can trade futures before the market opens. That's the beautiful thing about futures. Got this trend line drawn right here. I know that we're in kind of a bearish sentiment right now, which means the market is going down. But what I'm really looking at, if we're going down, I'm looking for an uptrend. So remember, price never just goes straight down. It goes up, down, up, down, up, down. And it's like making lower highs. So here's a high right here. Here's a lower high right here. Here's a lower high right here. And then it's making lower lows. Here's a low right here. Here's a lower low right here. Here's about an equal low right here. And let's move the chart up. It's just dumping right now, but this is probably this is a lower low essentially. But so if I'm looking for price to go down, I find that uptrend, like a clean uptrend. If I can draw an uptrend on a 15-minute chart, I really like that trend. And so this is the 15-minute chart right here. the higher the time frame play, the stronger that the play will be. Like, the higher the time frame that you draw your or complete your analysis on, the stronger of a move you'll have. So this is a trend line on the 15-minute chart. Usually what I look for, obviously I look for a break of that trend line, but you got this confluence here. We're breaking VWAP and we're also breaking the 9 EMA. So this would have been a great entry this is on Eastern time. So this is 8:30 wait, no, this is on Central time. So 8:30 my, no, this is on Eastern. So 8:30, which is an hour before the market even opened, would have been a beautiful entry, and you could have rode this thing all the way down beautifully. So that's just a little couple analysis key tips and of like the way I kind of analyze my trades. I will see a lot of y'all on December 1st on that Zoom call. For that call, just bring questions, y'all. Don't just like kind of sit there and expect me to spoon feed you, because I don't know what you don't know, and I don't know what you're looking to get out of it type thing. So I'll see y'all December 1st.